morning to our speakers and distinguished guests from the government, the business sector, the diplomatic community, the academe, and think tanks. I am Joyce Ilas. I am the Advocacy and Communications Lead of Strat-based Albert Del Rosario Institute, and I will also be your host and moderator for this morning. On behalf of Strat-based ADR Institute, I welcome you all to the first virtual business roundtable discussion of the year, entitled Economic Outlook for 2023, Building the Momentum Through an Investment-Led Growth. Now, this event seeks to bring together the country's economic experts to share their outlook for 2023, as well as their insights on adopting an investment-driven strategy toward ensuring inclusive and sustainable economic growth. To formally open our event today, let us all welcome Strat-based ADR Institute's President, Professor Victor Andres Dindo Manhit. Professor Manhit is also the Managing Director of the Bauer Group Asia in the Philippines. He served as Associate Professor and Chair for the Political Science Department of the De La Salle University. He was a former Undersecretary of the Department of Education, and he was appointed as one of the ASEAN Regional Forum experts and eminent persons by the Department of Foreign Affairs. He regularly contributes articles and columns on renowned news platforms like the Philippine Daily Inquirer and Business World. His expertise are strategic studies and management, legislative research, and public policy analysis. Ladies and gentlemen, Professor Dindo Manhit. Good morning, sir.
Good morning, Joyce. Thank you for that introduction. Good morning to our speakers. We have a great panel today. Prominent thinkers, thought leaders with regards to how we should look at the Philippine economy. And to our participants, I think we had at least 140 registrations as of last night. Hopefully they can all join us this morning. In Strat-based ADR Institute, especially our research and intelligence team, we have identified at least 8 geopolitical risks that we believe in 2023 we will face as a nation, and as we face it beyond our own borders. But key to this is this issue of the cost of living crisis, the challenge of generational inequality. I'm saying that because of when we look at data that we have gathered from our own research or survey partners like the Pulse Asia, on top of minds of Filipinos with regards to their urgent national concern: inflation, pay of workers, creating more jobs, reducing the poverty of many Filipinos. The top 4, as we ended the year and welcome 2023, is economic. And as we track these issues through time, we compare it through the help of Pulse Asia. And in my next slide, we can show that you see where the government seems to be perceived as not doing well as they continue to have to decline in terms of performance rating. And we consistently see this also in our social weather station results as of end of December. We saw poverty continues to be a challenge to the Filipino people. Hunger, though has improved since pandemic times, still it's being experienced both at a moderate and severe level by 11.8% of Filipinos. Good thing is Filipinos remain optimists as they face the 2023 year. We have seen this not only in SWS, but even in the social weather station, where we saw higher numbers in terms of optimism at 62%, which is in my next slide. What concerns me most is the central bank data as of fourth quarter, when they speak of the business outlook. Consistent with the public's urgent national concern, inflation is on top of mind of people. Worse is that when you look at the consumer outlook, the faster increase in the prices of goods and higher household expenses, low income for our people. Of course, we see some good numbers as of the end of December with improvements in unemployment and underemployment, but still people continue to be challenged with lower income and fewer available jobs for working family members. And this concerns me because at the end of the day, we define ourselves as a consumption-driven economy. We need our consumers to be more confident moving forward to 2020. At the core of this, I think, is jobs. A few weeks back, when the World Economic Forum gathered and our own president participated with some private sector leaders, they identified in the 2-year horizon, in the 10-year horizon, what they consider as risk. On top of it is the cost of living. On one side, of course, is climate action failure. And I believe, how do we deal with this cost of living? Of course, we have our speakers, our economists, that can guide us to how to deal with this, or maybe how will government will be dealing with this. But on the part of Strat-based ADRi Institute, we have always argued that maybe we need to slowly or even strategically focus on an investment-led growth trajectory, not only consumption-driven growth. Because investment are a crucial tool in increasing a nation's productivity while generating employment, providing income security, and alleviating other economic hardships being experienced by millions of Filipinos. We argue that to attain investment-led growth, the government must create a business environment that enables growth and innovation through market-friendly public policies, transparency, and good governance. Why do we say so? In the third quarter of last year, we ran a survey where we saw positive views with regards to the role of the private sector. They're the ones that will create jobs, not really government. Private sector plays a crucial role in accelerating economic growth. 86% of Filipinos says that. The government and the private sector should engage in partnership in order to sustain the country's economic recovery. 9 out of 10 Filipinos say that. And what can their specific role be? It's about creating jobs, uplifting the lives of Filipinos out of poverty, expanding livelihood opportunities. Our first paper for 2023, which I co-authored with one of our research managers, I spoke of investing in manufacturing, managing through a position of strength, that the government maybe should take full advantage of the existing sweet spots enjoyed by the country in the areas of demographics, natural resources, geographical location, and language facility, because these advantages power up the country's position of strength. With these inherent strengths, the Philippines will find it easy to build the momentum for long-term growth and development, provided that the Marcos Jr. administration focuses on getting its house in order through good governance and adherence to the rule of law. When people ask me, how do I look as a political scientist at 2023, I said, I view it from point of view or from a mind of cautious optimism. I'm optimistic that we can drive recovery through the private sector, through partnership. And that was my first commentary at the start of the year. That good governance is always key to fostering an investment-friendly environment. The government, and I would like to emphasize that, needs to provide greater support to domestic investors via incentives and to address issues such as the unstable supply and high cost of electricity and the ease of doing business. We need to drive recovery. We need to turn our manufacturing sector as a key growth area, collectively as a whole of nation, government, civil society, private sector. We can face 2023 stronger and believing that as a nation, as a people, we can overcome all these challenges of 2023. Again, good morning to everyone. Thank you to our speakers. Thank you to our participants, and welcome to our webinar this morning.
Thank you very much, Sir Dindo, for a very motivating opening remarks. All right, so for our first speaker, he is a distinguished economist and a former secretary for socioeconomic planning and the National Economic and Development Authority. He is Dr. Ernesto Pernia. It was during his leadership in NEDA when the agency spearheaded the creation of the Philippine Development Plan 2017 and 2022, and also launched the Ambisyon Natin 2040. He is also a professor emeritus at the University of the Philippines School of Economics. For today, Dr. Pernia will talk about revitalizing the economy amid uncertainties, investments in human and social infrastructure. Ladies and gentlemen, Dr. Ernesto Pernia. Good morning, sir.
Thank you very much, Joyce, Ilas. Professor Dindo Manhit has covered quite a bit of ground, the landscape in terms of promoting economic growth and development through investment. I will focus on human capital, social infrastructure, and physical infrastructure for inclusive growth in the country. The enumeration of these three kinds of infrastructures, human, social, and physical, they are deliberately sequenced that way because I think that is this is the priority. This priority, in terms of priority and importance, this should be the sequence, and also budgeting should probably follow this kind of sequence. Okay, let me start. Can you next slide, please? Yeah, there are three types of infrastructure sorely needed and which require major improvements for the Philippines to be in step with its ASEAN neighbors, which calls for a resolute attention from the public and private sector, the whole of society, along with requisite budgetary support. The huge challenge given the government's binding fiscal constraint with debt to GDP ratio of about 63.7% and a budget deficit of around 6.5%. This is where we need public-private partnerships. And I think as far as physical infrastructure, the attractiveness of physical infrastructure for public-private partnerships are greater than human and social infrastructure. So that comes last in my sequence of infrastructures. Next slide, please. So human infrastructure or human capital. This begins in the early stages of a mother's pregnancy and becomes more manifest at 0 to 5 years of age. At birth, the size of a baby's brain is said to be a quarter of the adult's brain. At 5 years of age, the kid's brain is about 90% of the adult's brain. Next slide. However, it is reported that in our country, about 27% of children 0 to 5 are stunted or underweight, hence unable to reach their full potential in later years. This is nothing new, but I think the problem, though serious, I don't think it's getting enough attention from the government and society at large. So I'm trying to emphasize this because this is important. This is the beginning of life. So meaning it's vitally important. Vital means comes from Latin word vita, which means life. Next slide, please. At an earlier World Bank, I'm sure you have seen this pandemic-related report, reveals that 91% of children 9 years of age are unable to read a short sentence or a short text or understand that. And this puts the Philippines at the bottom of about 10 Asian countries on learning poverty. And the sequence is Singapore is the highest, even Vietnam is after Korea and Japan, and then Thailand, Malaysia, Indonesia, and India is second to the last. And so the Philippines also ranks last in terms of learning deprivation and third to the last in terms of schooling deprivation. So it's quite a serious problem. And I think this needs a lot of attention, a lot of concern on the part of government, on the part of society at large. Next slide, please. As you know, in DepEd, there are about 30 million enrollees in basic education. 30 million is a lot of children. That is a bigger population than the whole of Taiwan's population, which is only 23%. Just to show some comparison. And this is a 4% increase from the previous years, and that the public spending per student is a mere fraction of corresponding spending in ASEAN, in our ASEAN peers. For example, compared with Thailand and Malaysia, we are just a small fraction in terms of spending per student. And this is reflected in our poor performance in PISA tests, poor performance in international standard student assessments. Relevant to this issue is quantity versus quality, quality-quality trade-off. The larger the student population, the lower the learning capacity, given given budget constraints that we have. Thank you. Next slide. And then so let me go to social infrastructure. This is the second most important, most vital infrastructure. This has to do with schools, hospitals, specialized medical facilities like virology. We're going to have a virologist soon, I hope. And we need well-trained teachers. I think that's another handicap we have in terms of student learning, quality education, and quality learning. This is indispensable for human capital development. Social infrastructure needs to be adequately and equitably distributed nationwide with specialized hospitals, science high schools, and higher education institutions. Based in the main cities of the regions, this will be a major contribution to redressing the stark inequality and poverty across the regions. Next slide, please. A serious and well-studied consideration of the state of human capital development in our countries suggests that it entails massive and smartly allocated investment in social infrastructure and well-studied advanced human capital or personnel. This will enable the provision of quality education and healthcare services to both young and older population across the country. Next slide. Physical infrastructure. This has to do with transportation, and spatial mobility. This is the physical infrastructure which completes the infrastructure cycle. It is a very costly undertaking But the advantage of physical infrastructure is that it is more feasible via public-private partnerships. It is crucial, though, that the conditions and guarantees imposed by the public sector or the private sector partners are fair and sufficiently attractive for them to recover their investment costs and with reasonable returns. Next slide, please. The current administration seems keen on undertaking PPPs, especially given the economic tight fiscal space. Moreover, the record of PPP projects under the Pinoy administration, a few of which were completed under the Duterte administration, has been given the thumbs up by expert observers and the general public. An additional funding source often tapped is, of course, official development assistance from Japan, from the United States, from South Korea, Australia, and to some extent from China. Next slide, please. The PPP modality has been adopted by a number of ADB developing member countries. A considerable advantage of the PPP mode for physical infrastructure is it frees up government funds for human capital development and social infrastructure, allowing them to get more substantial funding, a quantum improvement from the traditional allocation of budgetary funds. This would make it possible for the infrastructure triad to vigorously advance our country's economic growth and inclusive development. Next slide, please. Finally, talking about the PDP, Philippine Development Plan 2023-2028. The first, it talks about what are the appropriate strategies, and approaches to fulfilling the PDP 2023-2029. First, maintaining robust macroeconomic fundamentals for rapid economic recovery. Second, the vitality of the economy is only as good as the country's health and education systems. So this relates to what I was trying to emphasize earlier, the importance of human health, human capital, human development, and then the importance of social infrastructure, schools and health centers. And third, whole of government and whole of society approach is fundamental to policy efficacy. This ends my presentation. And as I've said, I would like to emphasize that, for example, if since the budget for physical infrastructure is about 1.2 trillion, I would say that even half of that should go to human capital and social infrastructure, because the other half of the budget for social infrastructure can come from the private sector with public-private partnerships. Thank you very much.
Okay, thank you very much, former Secretary Ernesto Pernia, for that very insightful presentation. I take note of what you said, that it's the physical infrastructure is really more feasible via public-private partnerships. I remember just last week, I think NEDA announced that President Marcos Jr. has approved the rollout of the administration's first PPP project, which is the construction of the University of the Philippines and Philippine General Hospital's Cancer Center. And of course, very important point, what you said about the vitality of the economy is only as good as the country's health and educational system. So again, thank you very much for your presentation, Dr. Ernesto Pernia. Now for our next speaker, he is an expert in financial analysis. Mr. Jonathan Ravelas has had over 29 years of experience working with businesses in providing market intelligence in both local and foreign economies. He was named among the world's most accurate forecasters by Focus Economics Consensus Forecast, the leading provider of economic consensus forecasts for 132 countries. He was previously the chief market strategist of BDO and is now the managing director of the e-management for business and marketing services. For today, Mr. Ravelas will talk about the outlook for the Philippine economy. Ladies and gentlemen, let us all welcome Mr. Jonathan Ravelas. Good morning, sir.
Good morning. Thank you for the introduction, Joyce. Let me just share my screen. Okay, hold on. Okay, so without further ado, let's talk about the opportunities and the challenge and the future of the Philippines. So first things first, so it's a new year, a fresh, clean start. So a brief review of what we saw in 2022. I guess most of the issues that continue to plague us from 2022 was really more driven by inflation. And of course, the main factor really was more driven by the geopolitical tensions that we saw with Ukraine and Russia, which continues to the day. And the rest, we were affected by climate change. There were a lot of concerns of demand volatility, and of course, the Great Resignation as well. And of course, the impact of supply chain disruptions. So not only did countries and companies face these challenges, but they continue to remain in force at this point in time. So I think one thing to consider from a business perspective is unpredictability is the new normal. So war is still here. Peace in Ukraine seems to be an elusive dream. China, the middle trap, I guess these are concerns that continue to plague China with a slowing growth. Question whether will they further really reopen, and that I think is a two-edged sword that's very positive for Asian economies when China demand reopens. But again, that could also fuel inflation. And I guess one of the other things that people talk about, and these were over the fourth quarter, these were the issues that a lot of people asked me. No? So aside from Ukraine, China, and of course Taiwan, so whether they eventually attack China, Taiwan, this is something that again, even today, we understand that Japan is giving us a new deal for military. So this could be a preparation. So this is something that again could be a geopolitical tension rising. So these are a few things that continue to shape the global picture. And the other thing is that the word recession, particularly coming from the US, seems to be underway, especially now that the US Fed, with a very low, a 50-year low of unemployment at 3.4%, seems to be there is a need to further raise interest rates. And again, that is another issue that will confront us, meaning a stronger dollar. So, but what makes me a bit optimistic about the Philippines is really driven by what's on the road ahead. So, given that the Philippines is a strategic location and we have a lot of advantages, Dindo and eventually Secretary Pernia have highlighted a few things. We wanted to ensure food security, improve infrastructure, promote investments, and really reduce transport and logistic costs. These things, these four things are again very important to be able to make the Philippines take advantage of its strategic location. So, but looking at the recent data out of the Philippines, it really shows that the Philippine economy is really back to normal and recovery is underway. No? So with the PMIs highlighting above 50, capacity utilization is at 72.5%, although it's still pre-pandemic. This is, I think, very important because when manufacturing capacity breaches 75%, we're seeing a lot of businesses eventually borrowing for more loans for expansion or working capital. So this is a number looking good, but we need more signs from the economy. Business permits are picking up. Other factors that highlight a more stable path are OFW remittances, vehicle sales, and of course, bank lending. I think what is a bit different is that in terms of exports, we're also starting to see the flight of exports, which is very good. So this really keeps a very optimistic view of the Philippines. And of course, added to that is the passage of the budget for 2023, the fiscal consolidation plan, favorable demographics, ample buffers, as Joyce mentioned, the build more and the PPPs that the new government will eventually highlight. We have a strong rating and of course the newly adopted Philippine Development Plan. So all of this creates that optimism. However, if we tend to look at our consumers and 70% of our economy is driven by consumer, we need to understand that people are still feeling the pain of the pandemic. There is psychological distress among the Gen Z, particularly the female. People are still looking out to invest. People are focused on the environment. Consumers are eventually starting to go back despite the challenges they face. So why am I talking about this? Because this thing is important. One of the most important things here is that digitalizations have really taken a huge step to consumers. So this is something that can make Filipinos more entrepreneurial by taking the digitalization aspect of things. Okay. However, sad to say that despite all the positive things, we need to look at what could eventually trigger a scenario. And my base case is still looking at the 6.5% growth for the Philippines, mainly driven by the external factors, higher inflation globally, and at the same time, the potential impact of a recession. So that could create a slowdown to around 6.5. Inflation to probably moderate to around 5.3%. And eventually the BSP overnight rate closer to 6%. But a slight depreciation of the peso to 57.50, but the stock market is basically flat at around 6,850. Mainly because there's still a lot of things to consider, and this could be a period of a tale of two halves. Hopefully, inflation really indeed peaks in the first quarter, and probably the second half will actually shift to a much better view of the economy, meaning inflation could probably slide further to around 4.5, and eventually we don't need additional rate hikes. That's the other story. On the other hand, what is developing at present is really more driven from the external factors. The US and the Fed narrative that they're almost over interest rates seems to be changing, and that could affect the peso. Further weakening of the peso could have inflationary implications for us. So that could actually provide a worse scenario with inflation probably sticking to just around 5.6% rather than moderating fast. as most analysts are expecting, and further hikes in rates would eventually kick in to ensure that inflation really indeed peaks, and at the same time we don't get to see much of the peso depreciation. But that will actually depend on how the US plays it. So in terms of the equity market, we could actually see a 5-7. So this is a scenario that actually gives a very gloomy outlook, and it's more driven by external. Sad to say, it's the same problems like last year, but a different year. So we need to be able to prepare for this type of environment. So hopefully the government is able to, first of all, think of addressing inflation. So despite that, the bigger picture of our economy is food, retail, construction, and real estate. And earlier I mentioned the word digitalization. One of the things that we should be embracing is the impact of digitalization. We have a lot of entrepreneurial spirit in the Philippines. One thing that has come to us, particularly for real estate, that could define this story is Starlink and more internet connectivity for the rest of the country. If that materializes, that actually enhances real estate, because people now can work away from the metros. And this is what we've been seeing in the BPO sector. And for some who continue to work at home, that will create more productivity. So hopefully the next businesses will be tourism, gaming, manufacturing, and hopefully mining. I'm betting very much on the manufacturing, just like what Professor Manhit mentioned, mainly because we are a consumer-driven economy. We must be able to convince investors to come to the Philippines. Don't invest in the PEZA zone. Invest outside the PEZA zone, because you want to take advantage of a very young Filipino population that is around 26.5 years old. They have the earnings potentials faster compared to other Asian economies. So this is something that is quite unique for the Philippines, and our population growth over the next decade will still be at 1% compared to our ASEAN peers. So if you want to sell retail products, this is the place to sell it in the Philippines. Manufacturing is key. So hopefully what could go right in 2023 is infrastructure spending. Hopefully we get to manage very well the pandemic despite these new challenges. And hopefully with inflation being trampled, hopefully by the first half, revenge spending will continue. And this could actually really bring the Philippines forward. And I think when we talk about the challenges, this is something that I'd like to really reiterate. Acta non verba, so action, not words. This is something that government should be able to handle when it comes to our inflation. We need to understand that people will accept slower growth, hopefully with lower inflation, but not higher growth with higher inflation. So this is a challenge that government should really fix. And I tend to agree with Professor Manhit when he says the main issue is inflation. So what now? How do we ride the next wave of disruption? It's really appreciating our resources. Despite the challenges that we see, which could probably continue till 2024, we need to be able to survive. We need to ride out these challenging times. Second, we need to repurpose ourselves. We need to repurpose our business so that we're able to pivot to the new digital age. Second, know the risks ahead. It's going to be a bumpy ride. I've mentioned about it. Inflation, higher interest rates. These are a challenge to cost of doing business. But take it into heart that, we have to keep investing. We just have to look forward so that we're able to see a Philippines that is stronger. 2019, it was the first time we broke the 3,000 per capita GDP, and that's the reason why we have a very strong recovery from 2020. It's because consumption growth has continued to remain resilient. To be able to support infrastructure spending, we need to pay the right taxes. But as consumers, we need to spend more but wisely. And our most important tool, pray harder. This is my last slide. Thank you.
All right. Thank you very much, Mr. Jonathan Ravelas. It was a very interesting presentation, quite disheartening that we will still be facing the same problems this year as last year. As he said, it will still be a bumpy ride, but also very motivating to hear a number of very helpful insights on how we can move forward and improve, especially in terms of digitalization and the next best industries. You mentioned tourism. Many of us are really interested to doing revenge travel, sabi nga nila. And also manufacturing sector, as Sir Dindo earlier pointed out. So again, thank you very much, Mr. Jonathan Ravelas. And to those who wish to participate in the open forum later, I know some of you probably have questions that you want to ask our experts. You may write your questions in the Q&A box below. All right, for our next speaker, he is Mr. Diwa Gunigundo. He served at the Bangko Sentral ng Pilipinas for 41 years, retiring from service as the Deputy Governor for the Monetary and Economic Sector. A career central banker, he was a driving force behind the BSP's advocacy for economic and financial literacy to address the issue of poverty. Now, Mr. Gunigundo is currently out of the country right now, but he sent us a video presentation to discuss improving the environment for job-creating investments. So, ladies and gentlemen, Mr. Diwa Gunigundo.
In our book, Economic Adjustment and Growth, which came out this month, February 2023, which we co-wrote with Dr. Don Villanueva and Dr. Bobby Mariano in Chapter 4 on capital and growth. One of the theoretical results is that higher saving rate raises both the steady state and transitional output growth through increases in physical, human, and intellectual investments that augment labor productivity. In the last chapter of that book is a case study on the Philippines, where we made the point that pursuing further structural reforms could improve governance and the quality of institutions. Addressing large infrastructure gaps could enhance investment-led growth and appropriate attraction of investments, both domestic and foreign, to the right sector could go a long way in capacity building and innovation. To me, this is how to build the momentum for economic growth this year, 2023. Now, we cannot overemphasize the big challenges of 2023. And our chart this morning shows that global recession and sustained inflationary trends are expected to continue this year. Even with an awesome 7.6% real GDP growth in 2022, the absolute level has just exceeded the pre-pandemic level. Per capita GDP is still below the pre-pandemic level. Public finance is now burdened by higher deficit to GDP ratio, exceeding 6%, and higher public debt of more than 63%. Now, this is bad for pursuing expansionary fiscal policy. Business confidence is less optimistic in the fourth quarter of 2022, while consumer confidence is more pessimistic for the same period. Needless to say, inflation is 2.5 times higher in 2022 compared to 2019, something that constrains both consumption and investment, especially this year. Now, since saving generates investment, we are also concerned that based on the BSP survey during the last quarter of 2022, the percentage of households with savings and those with savings in the banks both declined relative to their shares in 2019. Now, the next slide shows that we can be most hopeful, and we can derive this from what may be considered as one worthy takeaway from the Davos World Economic Forum last month. What the world needs today, according to this publication, is a new growth story, a new approach to sustaining strong and inclusive economic growth that addresses both social equity and climate change considerations within the broad framework of technological innovations. The opportunity looms large. Despite the economic scarring of the pandemic and the new challenges of a possible global weakness and high commodity prices, a new era of unparalleled prosperity is actually expected in the next 5 years. Now, digital innovation and even artificial intelligence could have unprecedented impact on energy, transport, production, and climate change management. But strong investment will be required because creative destruction will be triggered. Now, what will make a difference is becoming clearer, and the signs are becoming more obvious. The significant tipping point is the big decline in the cost of energy generation for both solar and wind power. Okay? And that started in 2018. Short-term battery storage will be starting to come down this year. I mean, the cost of short-term battery storage is expected to come down this year. Now, the energy capacity for solar and wind now accounts for 75% globally. In the case of the Philippines, I believe that we should try and explore to leverage on this key development in energy. Otherwise, inadequate power source could pull us back and slow down economic growth. Now, artificial intelligence has excellent prospects in serving as a general purpose technology, facilitating what is referred to as tipping points for various economic sectors, including energy, agriculture, chemistry, through its greater use in data analytics, modeling, and even forecasting. Now, with this key info, one can only imagine the implications on efficiency and productivity, as well as on overall economic growth and consumer prices. Now, Lord Nicholas Stern and Mattia Romani, during the World Economic Forum, reported that a recent Price and Waterhouse study estimated that AI technologies could raise global GDP by 15.7 trillion by 2030, barely 7 years from now. Now, more investments are likely to be generated by AI. The Philippines can do no less than leverage on AI and its appropriate application to both agriculture and industry, transport and energy, real estate, and commercial development. Now, the next slide tells us that investments need to be made in 4 forms of capital: physical, human, natural, and social. As the WEF, World Economic Forum, stressed, they are all necessary and complementary. Now, physical capital investment is in terms of new infra in energy and transport, climate change adaptation and resilience, as well as in production of both goods and services. Some 5 to 7 trillion per year is estimated to be required for the next 7 years. Now, Second, human capital investment takes off from the pandemic and should focus on health services and education, given the large economic scattering on demographics and the labor market. Some $3 trillion is estimated to be needed per year by 2030. Natural capital, third, investment is in the form of protecting and restoring the ecosystem of water, air, and the whole ecological environment. Estimated cost is around $275 to $400 billion a year until 2030. And fourth, social capital investment. Now, this is all about enhancing the quality of institutions and the distribution of prosperity and assets. We need to be able to manage change and the potential dislocation of people and their jobs. It is all about ensuring every stakeholder is heard and afforded control over their collective assets as a community. Now, slide 6 is where we reiterate the argument of Stern and Romani that global investment levels have to be restored and raised by around 2 to 3% of GDP per year above pre-pandemic levels. Now, this policy stance should point the way for the private sector as a partner for this new growth story, a shift from public consumption spending to public investment. Now, this should be at the heart of this growth strategy, which would be characterized by higher levels of economic productivity and lower levels of climate risk. Herein lies the criticality of public policies and institutions that determine the investment regime. We cannot overemphasize what we have been pointing out all these years. Strong and trusted leadership is most important. This will signal in a big way the path of the future, making a big push for investment to ensure credibility is present. Public commitments must be supported by equally strong institutions. There should be strong reliance on science and rules, competence and skill sets, independence and integrity of those in government service, strong monitoring system, and consultative engagement with both the private sector and the civil society. Finally, global collaboration on finance and trade, technology, and even capital flows is clearly indispensable. Next chart. Do we see traces of this global agenda for a new growth story, one that spurs growth and make it more sustainable and inclusive in the new development plan of the Philippines for 2023 to 2028? Now, in general, we believe the Philippine Development Plan is an exciting document. Yes, it is an exciting document that indeed addresses the key elements of what it takes to have a new growth story that is higher, more robust, more resilient. As the introduction to the plan states, framed by President Ferdinand Bongbong Marcos' 8-point socio-economic agenda, the chapters of this plan are organized with the underlying logic that dynamic and robust institutions and a resilient environment or institutions shall enable the social and production sectors to provide the services, goods, and high-quality jobs that transform the quality of life of the Filipino people. Slide 8. The plan takes off from the lessons of the pandemic, and they are the following. Now, it's very important to recognize those lessons of the pandemic. One, we need to maintain robust macroeconomic fundamentals because they foster investor confidence. Two, everything and everyone are interconnected and therefore strong linkages are very important. Three, government resources are limited, warranting close collaboration with the other sectors. And finally, this is most relevant, there's a need to fast-track investments in early warning systems, efficient social protection programs, effective resilience building strategies, research and development, digital technology, and innovation. Those are the lessons of the pandemic. And if we want to establish a great momentum for economic growth, I think they should not be lost on us. Now, the need for a broad framework, and we continue assessing the Philippine Development Plan, the need for a broad framework of technology and investment is addressed by the plan's chapters 8 on advancing research and development, technology and innovation, 9 on promoting trade and investments, and 12 on expanding and upgrading infrastructure. For physical capital, this is covered by chapters 5 on modernizing agriculture and agribusiness, 6 on revitalizing industry, 7 on reinvigorating services, 9 on promoting trade and investment, 10 on promoting competition and improving regulatory efficiency, 11 on ensuring macroeconomic stability and expanding inclusive finance, and finally 12 on expanding and upgrading infrastructure. So we see, as far as those types of capital, they are well covered in the various chapters of the Philippine Economic Development Plan. Now, for human capital, this is covered in Chapter 2 on human and social development. And for natural capital, this is covered by Chapter 15 on accelerating climate action and strengthening disaster resilience. And finally, for social capital, this is covered by chapters 13 on ensuring peace and prosperity and enhanced administrative justice, good governance, and improving bureaucratic efficiency. And chapter 16, plan implementation, monitoring, and evaluation. Now, slide 10 shows what is unique to the new plan. What is unique to the new plan is its rollout of one, the required strategy framework. 2, the required legislative agenda to ensure those goals are achieved by legislative institutionalization. Results matrix is also laid down to guide the implementation, monitoring, and evaluation, complete with baseline condition, annual targets, and means of verification with the assigned agencies clearly indicated. On the basis of the national plan, therefore, it looks like we have the basic ingredients of a new growth story for the Philippines. On top of that, the national budget for 2023 will put money to the attainment of those goals, summed up by reinvigorating job creation and poverty alleviation. The economy can therefore be steered back to its high growth trajectory as enunciated to in the medium-term fiscal framework. The budget is expected to be a major instrument in attaining the goals of food security, improved transportation, affordable and clean energy, health care, education, social services, sound fiscal management, and bureaucratic efficiency. Now, to the extent that this new growth story leaps off the ground, on account of right investments in the right sector, supported by technological innovations and artificial intelligence, with very strong bias against poverty and income inequality. We have to emphasize that any departure or perception of it might be counterproductive to the trust and confidence of the investing public here or abroad. Now, so the budget allocation should, this year and the next 6 years, remain consistent with the broad goal of generating the momentum for high, sustainable, and inclusive economic growth. Second, we should see significant leaps in both our economic efficiency in terms of lower ICOR and total factor productivity. Now, these are immediate indicators of the expansion in our potential capacity. Third, it is indispensable that all economic agents have the same perception that the macroeconomic fundamentals, environment, if you will, remain conducive to production and business. Enhancing our global and domestic value chains are critical to ensure business activities continue to roll. Growth, inflation, external payments position, public finance, and social indicators should point to the right direction. Fourth, good governance should be maintained. Now, any semblance of departure from good governance will be costly. I submit that perhaps the Maharlika Investment Fund should be given a fine-tooth comb before this is passed in Congress. Many indications show it is untimely because we have no surplus fund to invest, and it is self-defeating in terms of its fund sources. Anything taken from GOCCs or government-owned and controlled corporations, GFIs, government financial institutions, and the Bangko Sentral ng Pilipinas or BSP deprives the government of funding the budget deficit. Either the NG borrows more or impose higher taxes or do both. To me, that is not going to be optimal. Let me just say that we have an excellent development plan, but there are wild cards, and those are some of the wild cards. May we be found faithful, and this is my hope, in implementing it, pursuing it, monitoring it, and evaluating it for the good of our country and our people. We should always remember that economic growth doesn't mean anything if it leaves people out, that the government is not the generation working people. Thank you very much, and good morning.
All right. Thank you very much as well, Mr. Diwa Gunigundo. He did say that we have a new era of unparalleled prosperity in the next 5 years. That is expected. So that is quite positive through the help of artificial intelligence and digitalization, as also what Mr. Jonathan Revelas earlier pointed out. Mr. Gunigundo also said that the Philippines can invest on AI, artificial intelligence, which have appropriate application in the agriculture sector, transport, energy, real estate, even in commercial development. He also echoed the presentation of Sec. Ernie Pernia earlier when he said that investments need to be made in 4 capitals: physical, human, natural, and also social. And of course, the importance and the dire need to have a strong leader and strong institutions. Again, thank you very much, Mr. Diwa Gunigundo. Now, for our final speaker, he is Dr. Alvin Ang. He is the chair of the Ateneo de Manila University's Economics Department. He was also the former director of the Ateneo Center for Economic Research and Development, where he led a team of senior fellows that regularly provided economic briefings to their corporate and government clients. Dr. Ang has worked in the public, private and academic research sectors for 3 decades as an economic development specialist, investment analyst, corporate planner, program officer, lecturer, and also director. Today, Dr. Ang will talk about the Philippine economic outlook amid rapid global developments. Ladies and gentlemen, Dr. Alvin Ang. Good morning, sir.
Good morning, Joyce, and thank you for that very kind introduction. Well, actually, most of the things that I want to say have been already expounded by my the previous speaker, from Dindo to Sec Ernie to Jonathan and Sir Diwa. But just in case, I'll add some more, and I'll just quickly run through some of them that have already been discussed. So basically, we all know, we are all here because we wanted to know if this growth figure that came out is really sustainable. And as my topic is really geared towards what is the global implications for many of this, let me just highlight the very interesting chart put together by Visual Capitalist, came out, I think, the last week of January. And interesting that you'll find many of the things here being mentioned are those that will really affect us directly. For example, inflation will begin to cool off, but of course, this is a general global context. And then China's economy is bouncing back, which is, we are already seeing trickles of it happening. And then artificial intelligence, just like what Jonathan and Sir Diwa were trying to say earlier, that we need to prop up our investments in this area. And also, it's also important to know that manufacturing is going to shift away from China. Are we going to get parts of that? So these are interesting things that are happening around us at this very moment, and experts are seeing it this way in a global sense. As already mentioned, I'd like to show it in a chart so that we can have a clear view of what has happened in the last 4 or 10 quarters of the pandemic. You can see that really what has happened is simply we have just basically gone back to the levels of 2019, right? The growth, we have lost about 3.5 trillion in momentum because of the pandemic, because this is just what happened. We have just gone back to 2019 or a little above it, but then we have lost about 25% of opportunity had the pandemic not happened. So this is also one of the factors pushing us to a very strong, we can really say, base effect recovery that is happening in the last 2 years. Now, as already mentioned also by Sir Diwa earlier, he talked about the impact of the consumer's expectation. Also, Dindo mentioned about this. You know, the latest consumer expectations see that people are seeing rapid deterioration of their expectations, suddenly turning negative after the very strong performance just after the elections. And this thing that we all are talking about earlier about consumers being the main engine of expenditure side of growth, we see it suddenly being challenged by high prices. No, so revenge spending clearly seen in the last many quarters prior to our current quarter, and this might be changing soon because of inflation, right? Also, savings. If this is going to be sustained, consumer spending and consumer revenge spending is sustained, we have to see that savings is also being supported by here. But you saw that a lot of the savings that were generated during the pandemic, in fact, that was amazing. We have reached about 1 trillion increase in savings in just a year and a half, compared to about the previous 1 trillion, which took 2.5 years. So the pandemic really caused a lot of people to save. But unfortunately, the question is who was saving, right? Who was saving? If you look at the BSP survey that happened in the middle of the pandemic, these very interesting figures came out, right? That the uptick of financial services doubled, particularly in formal account opening. So we have a big opportunity there to use technology. Basically, people are increasing their financial services or increase their financial services during the pandemic, basically because you need to access financial resources digitally, right? But then if you look at the savings, who actually saved during the pandemic, you will see that it's actually the ABC class that saved. It's not it's not broad-based, except that the account openings or formal bank account openings have become broad-based. And most of the people who open their account mainly open it basically for payment, and actually savings has decreased. So overall, we have seen that the savings were made mainly by those who are in ABC, right? Now, if you look also at the vulnerability factor, you see that the same survey, we find that very few people really are insured. So you have a very high vulnerability if something challenging happens, like for example, if there is like a typhoon or a disaster, most people will simply borrow, right? Because there is not enough savings, not enough liquidity to meet that, right? And that translates, of course, very clearly. We in the Philippines have the lowest savings rate in Asia, one of the lowest, and also one of the lowest foreign direct investments. So in that case, you know, like what our colleagues have said earlier, the power to push investment is really dependent a lot on government and the private sector working together to bring in more investment opportunities in the country. But there are some trickles of good news, and we have seen it already earlier. Employment is actually roughly 5 million higher than pre-pandemic, right? So this is really good, you know, because we have reached more people, have more jobs at this current stage. But if we distribute that jobs, who has that jobs, we will see that later. But the interesting thing here is that we have a labor force participation rate that has now moved closer to 70%, when it was lingering over the past decades in just 60%. So more people are now participating, and underemployment is also decreasing. That means quality jobs are being generated. However, as we go to the breakdown of these jobs, where are these jobs being created, right? So if you look at the breakdown of jobs being created, most jobs are being lost, particularly in the agricultural sector. And the big source of jobs growth is really this, sorry, let me go back to that, is this other services. According to the PSA, the other services is this. This is what is happening around your community. Look around you. People services like barbershops, parlor, laundry services, even funeral services, repairs of goods and computer equipment, among others. So this is really community-based job opportunities that are being generated. But the question is, there may be quality jobs, but then are the wages high enough to sustain increased economic growth? So if you look here, we actually are losing a lot in agriculture. You know, we're not creating enough jobs, losing jobs there, and most of the jobs that are being created are in services, right? So the main job producer is really the services sector, right? So that brings us now to the structure of incomes, which also Sir Diwa mentioned earlier as part of the Philippine Development Plan. You really don't want growth to be inequitable. You want people to catch up. So disposable income of the rich is actually now 14 times than the lowest decile. So that's a huge difference. And that inequality is being felt by majority, right? And where is that coming from? If you look at the poverty side, you will see that most people who are poor are really in the agriculture sector, and they are in the rural areas. So that means you need to address this sector to be able to, you know, at least prevent further poverty and decrease at least the problem of inequality. But then looking at productivity and competitiveness, this is where, if you are nitpicking where to invest, you will see that if you follow where our productivity is and our competitiveness, then we are actually attracting investment basically in sectors that are in wholesale and retail trade, in construction, in transportation, in accommodation. So these are services that are very much available, and we are good at that, but they do not produce the same kind of productivity that will increase wages, just like what is being observed in the finance industry, in the information and communication, and in manufacturing. So if jobs are not going to be distributed across these different sectors, then you might have jobs being created, but the quality, it may be okay, but the wage may not be high enough to be able to catch up with high prices. Okay, so the high price story is there already. Inflation, our inflation is supply side. It is not caused by much income or excess demand, right? And people are actually expecting higher prices and higher interest rates according to the BSP Consumer Expectation Survey. And since inflation in the Philippines is mostly food, right, and fuel, which are imported. So just like what Jonathan mentioned, if there is an impact of the changes in the foreign exchange rate, that will import also inflation into us. And compared to our neighbors in Southeast Asia, we are the only ones highly exposed to food and transport, right? And like our neighbors. And of course, there's one factor beyond the war in Ukraine, which is affecting all of us: climate change, right? And it could cause drought. It could cause typhoons and the like. So that could and lead to extreme weather. And so climate change is going also to contribute to our challenges in food production. But there are good things happening. International shipping costs have really gone down significantly. So this makes the supply chain gridlocks, basically has ended. So especially with the Chinese opening, so more goods mobility is now seen. But then, just like what Jonathan mentioned, the U.S. Recently reported slowing down inflation, but still very hot jobs market. So that means the U.S. probably will not stop raising interest rates. And that brings us to a case wherein higher interest rates in the US, with the interest rate differential of 2% between the US rate and the Philippine rate, then it is very possible that interest rates in the Philippines will go beyond 6%, which is not good for borrowing, particularly our business people, and also will affect mortgages. Right, so this is a challenge, and we know that interest rates no longer is not really used to fight inflation, basically because our inflation is supply driven. So it's really more of an executive function rather than monetary working on it. It's complementary, but it's more a local domestic challenge of supply. So since we had hit a surprisingly high inflation of 8.7, no, the forecast we have we are showing here actually is about, we will still average at about 7, but then it did not include the spike of 8.7. So we are still going back to our drawing boards and seeing probably 7 will be the average. It will be way above, higher than the 4 that the BSP is projecting. And our exchange rate, what is good is our exports suddenly started to increase in December, and hopefully it picks up as the Chinese economy opens up as part of the global value chain. It helps us to increase our export production, but mainly, of course, they are all in the pesa. So we need to these trips of the president, we need to be able to increase export to non-traditional, non-regular products that we're exporting mainly. We should be exporting locally produced content. Also, the trade deficit, we know, is one of the largest in the region. We have enough imports cover to caution us from a possible Asian financial crisis type of challenge, but that is short term. So generally, we have to do more investments to be able to expand our capacity to exports, not depend on the OFWs and tourism and BPO. So tourism is still way below the pandemic levels. We just hit about 2.5 million in 2022 when we were hitting about 8 million pre-pandemic or even more. Remittances is okay. We are back to pre-pandemic levels, but then we still have not opened up all the markets. There are still pockets of markets that are not open, and then pockets of professions that we are not allowing our people to go. So that also puts like a cap to the extent that we had more remittances coming in. It's good that the higher cost of doing business in Europe and US and in the West basically is sending some opportunities for the Philippines in the business process outsourcing side. But how do you continue that in the face of artificial intelligence, right? So this is something that is there, but we hope that we will be able to find and fine-tune this competitiveness to a higher value adding rather than just simply the basic business process outsourcing. Now, if you look at our financial condition, the deficit has slowed down a bit to about 5.7% of GDP. But then the question is, how do we increase our economy to be able to shrink the size of the debt? You know, we are at 62 right now. That is previously we have been able to decline the debt to GDP ratio because of a growing economy. But then we have also to spend more because of the pandemic. So now, how do we increase the economy to be able to outgrow the debt? So that's the challenge that we need to do right now. But then the Philippines actually did not or does not have the highest debt to GDP ratio. You know, compared to countries around Asia, you know, Japan, of course, and Singapore even has higher debt to GDP ratio than the Philippines, but that doesn't mean that they're in a bad condition. They have other surpluses where they can draw into, unlike us. So that's not a good comparison, really. Loans have started to come back, but again, like what Jonathan echoed earlier, our concern here is you have rising interest rates, so it could temper the growth of loans. Also, this is also what you can observe from the BSP data on consumer loans. People are borrowing mostly on credit cards and on salary-based general purpose. That means these are the formal employees who are recovering from the pandemic. Maybe they have saved a little, but then when the economy opened up, they are readjusting and coming back. So they are now borrowing again. So these are unprecedented increases in credit card rates, credit card borrowing, and also in salary-based borrowings. But recently, the BSP already increased the cap on credit card transactions to 3% per month. So again, this would, you know, put like a cap to your further consumer spending by those in C, D, and E, right? Because they are the ones mostly borrowing the salary and the basic credit card transactions. So if you really want to, you know, spread the growth and sustain it, we know that if you go across the regions, you will see this picture. Really, to spread the growth, to make it equal, at least, is to really put your resources or investments in agriculture. Or this can be a public-private activity, you know, to address the challenges that will be forced by poverty, inequality, and also unemployment. You know? In my previous briefings, I have shown this chart we have generated during the pandemic. Very interesting. You can see here basically all the major crop outputs. This is data from the Philippine Statistics Authority. You will find that, you know, all the production volumes are all flat for the last almost 20 years. So that means even as the population is increasing, the output is just the same. So that brings us to a very challenging picture that, you know, really productivity in agriculture is very limited to a few products. and where you put a lot of resources. For example, palay, but there's also a cap there. In fact, onion here was still increasing. This was prior to the condition we faced a few months back. But this is basically the reason why you have an oversupply, because you produce so much onions in the past, right? So if you go by regions, you will find that they're not the same. For example, sugarcane, we know, is in region 6 and a little in region 10. We know that some vegetables are not produced all over, so Bicol has an oversupply of that. Cassava, which is imported, demanded in the Western economies for pastry products, is in ARMM. And then palay, as you can see, it's not all across the country, the production of it. So, these figures or these charts give you an understanding that our agricultural sector has a lot of context specificities that we have to consider when doing and addressing it. And I'm sure our colleagues in the Agri department knows this. Also, another challenge, housing. We have still a backlog of 6.7 million in the 2017-2022 plan. So this is still a lot of houses that needs to be built. And what are we doing here in this area? Another challenge we are facing is waste. We have a Republic Act 9003, the Solid Waste Management Act of year 2000. It's now 23 years, but if you look at the composting, recycling compared to the total, it's just about 15%. So that means we are still polluting and not contributing to this. So there's a lot of opportunities here to be made. Now, as I go to the our forecast, basically here we are using what is known as a business cycle model. So it looks like we can still hit about 7%. Like just what Jonathan said, the base case for the Philippines is its long-term growth path, a growth rate of 6.5. But we can grow 7 this year, possible. But then where is growth going to come from? Definitely not from agriculture. In fact, in our model, if we don't do anything, our agriculture sector will only double after 66 years. That's not a good sign. So we need to do something about this sector. We need to do something about mining. We can adjust and adapt governance changes there. We are more competitive in construction, transport, accommodation. But see, we have shown you that these are not productive sectors in productivity-wise, because they simply contribute because there's a lot of people in that sector. Okay. Right. Let me this. So business cycle on the expenditure side, we see that the household consumption is growing, but I don't know how long will that last with the high inflation environment we are currently experiencing. So we need to see private investments to pick up. There's some caveats, and some of these have been mentioned earlier. First, there's still pent-up demand of the richest 10%. They're still ongoing. For example, as can be seen by car sales, one of the highest in 6 years. And then tourism, lot of upside because we only have 2.5. We had 8 before, and a lot of that Chinese. So if the rest of the world, just finds their way to the Philippines, hoping there's a direct flight from Europe, so they're not going to stop in Bangkok and in Singapore. We can get some of those investments coming and tourists coming to the Philippines. The war in Ukraine increased the price of oil and natural gas, but since we have a mild European winter, the Europeans are able to shift the supply of natural gas from Russia to other countries, so pushing the price lower. So this could help lower energy costs. Global food prices, however, may remain elevated because of the war, because Ukraine and Russia, number 2 grain producer combined in the world, particularly wheat, and then also Russia, main supplier of urea, so fertilizer is at a risk. Okay? And there are climate and disaster surprises, just like the recent Turkey, Syria earthquake. There is, of course, the rising geopolitical tensions, which my colleagues have already mentioned, and they will play a big role in the future. And what we don't want to see in the Philippines is that we develop domestic complacency, because yes, we can import, we can bring in all of these products outside to come into the Philippines to lower inflation. But then if we don't build up our domestic capacity, then this story will repeat itself again and again. And we are exposed to a huge global challenge that like what we are facing right now. Opportunities, our colleagues have mentioned their views. We're showing you some of what we think should be PPP or opportunity for the private sector to come in agriculture. We have this data from PSA, but this is not granular, it's regional level. But is it possible that we can have an inventory for every LGU of what agricultural products they produce now and what is their surplus and what is their need, so that there's a national database they can share, so we don't hear this news of onions rising and this now tomato being thrown away, because simply there's no signal that is this is something that should not be forgivable in an age of TikTok, right? Then cold storage should be an investment of the private sector all over, so that the farmers are not at the mercy of a few cold storage available. And technology, with this, like what our colleagues have mentioned, to a certain extent, I was thinking, if we can make internet, basic internet, at least 6 GB of speed, to be able to connect schools, students, small businesses as free, make it public good, that at least until that speed, so that they be able to check information, not to watch not to binge watch movies and the likes, but to use it for information purposes. So this is where your national ID is critical. We are able to do it in bank account opening in just such a short time. The national ID should follow whatever the banks were able to do in such a short time. We need to improve our land use and waste management policy. We need to address housing backlogs, and there's also this skill development. We have so much human capital, just like what Sir Ernie said. We have the human capital base that's available, but then we are training people for just to get trained, but we need to train them for jobs that firms needed. So the firms should direct the skills development. They should be part of the development of skills in this country and education. So just as a close, like good book said, if we wait for perfect weather and never plant, we will never harvest. Thank you very much, and God bless.
All right. Thank you very much, Dr. Alvin Ang. Very interesting presentation, and also very interesting when you said earlier that, hold on, sorry, my video is not working there. Very interesting when you said earlier that while the employment rate increased, you also pointed out that while more people are getting jobs, especially in the services sector, the question really is, are they earning enough, considering the increase in prices of basic commodities and services? Really one of the biggest challenges we are facing now. So thank you again, Dr. Alvin Ang. And at this point, we will now proceed to our open forum. So may we request our speakers to once again turn on their cameras. Dr. Ernesto Pernia, Mr. Jonathan Ravelas, and Dr. Alvin Ang. We'd like you again to join us for the open forum. There. All right. And to our online participants, to those who are watching us, and who wish to participate in the open forum, you may write your questions in the Q&A box below. Ayan. Very interesting discussion and from our four speakers today. I'll ask the first question we have here, a prepared question, because it's been almost 8 months po, since the new administration started. So for Dr. Pernia, Dr. Ang, and Mr. Revelas, how would you assess the government's current efforts towards establishing an enabling policy environment to attract more investments in the country? So assessment of the first 8 months, and just a quick follow-up to that, in what areas do you think should there be some improvements po? Siguro we can start with Sec Ernie.
Okay. Yes, well, the president himself has been traveling quite a bit. So I'm not sure to what extent the travels are going to pay off in terms of, as he has been saying, there have been commitments, but you know, commitments are commitments, and we are used to commitments, especially in my case. I was also in the cabinet before, and every time we travel, there are some commitments, but you know, these commitments really do not materialize to the extent that they are, you know, they're made. For example, when we went to China, the commitments were about 20 projects. 20 projects were committed, but then it turns out that we only have only obtained about 2 projects so far. The Kaliwa Dam, which is still ongoing, and the irrigation project in Cagayan Valley, north in North Luzon. So that's about it. And so the other one would have been the long rail transportation from Manila to Bicol, but that hasn't you know, materialized. So that is the kind of incredulity that we also get from these promises. Yeah, but in the case of President Duterte, he only went to China, but President Marcos is going to several other countries, and I don't know if the promises of those other countries are more believable and more achievable than the promise that the Chinese leadership gave us when we went there. October 2016, I think, was when we went there first time.
A quick follow-up, sir. What do you think are the areas that the new administration should have more improvements on, sir, or focus on in the coming months?
Improvements, well, we need improvements in in infrastructure, as I've said, and the thing is, we want you know, more ODA for physical infrastructure, so that the government budget can be shifted to human capital development as well as social infrastructure. Actually, we also already have a PPP project in the PGH Cancer Center for UP in Manila, but that's the first one. I don't know to what extent there will be more social PPP projects, social infrastructure PPP projects, and even in fact, in terms of education and the healthcare for younger people, and you know, to improve and enhance human capital development, there can also be PPP projects. But as I've said, they are not as you know, productive and remunerating for the private sector participant. So we really should just think about PPPs in physical infrastructure. And
All right.
more foreign direct investment in other areas as well. Like agriculture is important, agriculture, and also physical infrastructure.
Okay, thank you very much, Sir Ernie. How about Dr. Ang? What do you think po? What is your assessment on the first 8 months?
Well, I think the first 8 months have really been a like a consolidation of what the economic recovery is going to look like, and much work were really focused on developing the Philippine Development Plan, and the economic team has really come up with, just like what Sir Diwa mentioned earlier, about really a well-crafted plan. I think now the question is the execution of this plan. So that's, since that is now in place. However, of course, along the line, the last 8 months, also the president, was facing a lot of the challenges created by the global headwinds, particularly inflation. So, the solutions were really not very easy. So, in the 8 months, there were shuffling of people in the cabinet already, as we have seen. But that being the case, I already mentioned earlier where the government should put their resources or invite foreign investors to help, particularly, there is already a Public Service Act. The IRR is being ready. So what are we doing to attract the foreign investors to come in there? In that segment, because that's ready. We don't need to amend the constitution for foreign ownership along that line. And then also, I shared earlier about our challenges in agriculture, like what Sir Ernie had mentioned. It's really something that you need to address squarely. You cannot wait. Furthermore, as I said, doubling time is 66 years. The more we delay this, the more people will move out of agriculture, try to get low skill kind of jobs in the urban centers. That would, prevent and it will cause lots of challenges in health and human capital development in urban centers, while leaving rural areas basically with very few opportunities. So if there is just that kind of transformation in the rural areas, particularly trying to bring up agriculture to a different level, not reactive, but proactive kind of planning in that sector. Maybe, I think, of course, this is national in context, but much of agriculture is really local government. So there's really need to be a big play to be made by the local governments in order to make this really something sustainable.
All right, thank you, sir. How about Sir Jonathan Revelas?
Oh, well, for me, I guess the new administration actually took the right steps. From the State of the Nation address of the president, he outlined what he wanted to do for the country. The primary focus on agriculture. The previous administration of President Duterte has already provided the necessary details so that we can eventually become a investor destination. As Dr. Ang mentioned about the changes that they made on the Public Services Act, Foreign Services Act, and the Retail Trade Liberalization Act. This would have eventually attracted a lot of investment. However, the sad part about the reality is that the winds never blow to where the sailors want to. The sailor adjusts to the winds. Eventually, the captain, being the president, came at the point that we already took a turn. We were already out of the storm and moving back to port. Eventually, as we move to port, there's another storm. And this is what's happening right now, these challenges. The problem of agriculture, sad to say that what Dr. Ang mentioned, I tend to agree. It will really take a long time. But I think one thing that we need to do is eventually think out of the box. Now that I'm no longer in the banking sector, I'm actually trying to help a lot of SMEs. And what we've done one of the important slides of Dr. Ang is showing which parts of the country can produce what. There is a Sesame Street video that talks about what the king wants. If we're able to ensure that certain areas of the country can produce it for the rest, for everyone, why can't we do it? We've seen this during the pandemic. Onion prices weren't as this high during the pandemic. People were still getting their supplies even though they were locked at home. That's thanks to digitalization. This is something that probably people in the government should start rethinking of how to use digitalization so that we're able to do the same things like we were during the pandemic. We only had to look at our Viber, our phones. It eventually had the Viber. Someone will bring the vegetables to you. We saw farm to table strategies that were quite unique during the time. Why can't we do it again? Second, why not use digitalization to encourage the children of the farmers to embrace digitalization? They love TikTok. Why don't they take photos of their parents eventually harvesting their produce and eventually use the digital platform like Facebook to eventually sell their produce? You know, we need to be able, these are challenging times. We need out of the box thinking strategies. As I said, one of the things that I think this government is also trying to work on is the impact of not just talking about infrastructure. The previous administration highlighted the digital infrastructure. Starlink is going to be a game changer for everybody. Why? Because if people are connected to the internet, there will be a lot of opportunities to work from home or outside the metros, which could be cheaper. That will be good for BPOs. Hopefully, in the next 2 to 3 years, BPO revenue should overtake OFW remittances. If that materializes, look at the social cost it will actually bring. It's just that I guess right now, with inflation being the main problem, government should really act on this. Forget growth, think of inflation. That's why I said acta non verba, action, not words.
All right. Thank you very much, sir. Very interesting that part you said about integrating digitalization and the agriculture sector. We actually have a related question to that, but we'll go back to that later. Medyo marami na pong tanong from our online participants. So we'll try to answer as many as we can. One of the first question that we have from our online viewers or participants is, do you think the country's integration to RCEP or to the regional comprehensive economic partnership will highly contribute to the country's economic upbeat? Who would like to answer? Sec Ernie, what do you think of our participation in RCEP?
Yes, I think we should be participating in RCEP because that will open our our borders to other countries in the participants in the RCEP. And so in terms of exports and imports, there'll be freer flow of exports and imports. And well, of course, I think the producers, the farmers or the producers in the Philippines are kind of worried because they think that it might lead to more competition against what are locally produced. But well, that is something that can be staved off if it is really extreme competition and making our local producers, putting them in a lot of hardship. Then there can be some mitigation of that of the hardships that they'll be experiencing, and it's a matter of balancing these pros and cons when it comes to opening up our economy to both importation and opening up ourselves for exports to other countries.
All right. Thank you for that, Dr. Ernesto Pernia. The second question I would like to ask this to Dr. Alvin Ang. Sir, how do you think the government can or will strengthen agribusiness by integrating the ease of doing business? So how do you think can the government strengthen agribusiness by integrating the ease of doing business?
Well, like I mentioned earlier, the many of the things we want to see in agriculture is really local government in nature. I mean, at least the basic information should come from them. And ease of doing business is also a local government domain. So even with the passage of anti-red tape act or the ARTA law, we are still seeing, a lot of these many uniquely, there's no standard LGU way of dealing in doing business. Even if you wanted to lower the number of steps in acquiring permits, etc., you still find that there's some addition to some of these requirements. So it's really a matter of, I think the law is already there. It's a matter of LGUs already and also understanding their competitiveness. If they don't see themselves competitive, investment should move out and go to sectors where, or LGUs or industries where they are more business friendly. So that is some kind of an opportunity and as well as a challenge to governance, both at the national and local. For example, agriculture is devolved basically. So you really wanted to, put in a very good capacity at the local government level to be able to do this. But then, if they are not standardized in the way of doing things, then it will be dependent on which area is able to think out of the box rather than just being regulatory and doing it their own way.
All right. Thank you very much, sir. And related to that, I would like to ask the next question to Sir Jonathan Ravelas. Sir, related to also what Dr. Alvin Ang said, the next question is, what's your take with regards to the country's move towards establishment of e-commerce or bringing the country into digital economy? And I'll add another question, which is also related to that. Do you think that connectivity in IP areas or digitalization in IP areas would increase agricultural production, sir?
That's a very good question. I guess really, as I said earlier, connectivity is very important. With all of these new technologies that we have, they can improve productivity with this, having to know the type of weather in a certain area, all of this technology. And I think one thing that we're all forgetting, that when the Philippine economy was growing in the 50s, the 60s, and the early 70s, we were very agricultural. And one of the things that were present at that time were the strength of the rural banks. However, because of change, people started looking at urbanization as part of the issue. So eventually people and investors shied away from rural banks. People wanted to go to commercial banks. So now that the rural banks are much weakened, there are around 500 rural banks in the country, but around 100 are the ones that are strong. They need to be reinforced so that they're able to help the farmers. Funding is very important to them. So you need to be able to do that. And in my little way that I'm doing it out of the banking sector is really not only teaching them, we're using people to expertly teach them how to plant, the types of technology. Second, provide them with financial literacy so that they know how to do things, manage their money, and eventually the digitalization is important so that they're able to do marketing. Because if they're not going to go through this type of avenues, then definitely they could not create scale. What we want to be able to create for our farmers is something that they're able to do it in scale. So it doesn't necessarily have to be a cooperative. It can be a group of 30 people just to be able to present to a financial institution that we need your help. So that's one. And at the same time, we need the local government to be able to stay tuned to these farmers of what they really need. The problem really is coordination among the LGU, the DA, and eventually some people in the private sector that will eventually try to support the farmers. And it's really important when we talk about connectivity because it is a game changer. You know, people think that in terms of real estate, they won't be affected by connectivity. It does, because in certain areas that you don't have connectivity, it looks dead. Connectivity, you know, you can have your own digital business. You can be a VA, a virtual assistant, right? So right now, it gives opportunities for the young ones, especially the Gen Z, to multitask. It doesn't necessarily have, you have a full-time job, but you can part-time if your parents are farmers, then do the, you know, sell their produce, right? So that's what you call a WFW strategy. We find ways.
All right. Thank you very much, sir. We have another question here, a follow-up question regarding the RCEP. So I would like to go back to Dr. Ernie Pernia. Sir, the follow-up question is, with the recent port statistics, imports grew 3% while exports declined 11%. And PPA's imports projection also increased. So do you think, sir, is the country's integration to RCEP actually threatening our agricultural production? Kasi imports will just further balloon daw po. What do you think, sir?
Well, definitely, it will be easier for us to import, and the import prices will be lower than what we have been paying for. Yeah, and the other thing is, you know, we want our producers, local producers, to rise up and become more competitive. You know, well, market competition is really a discipline also, because if you want to, you know, compete with others, then you just have to, you know, shape up and be more attractive to buyers. So it's something like that. But as I've said, imports can also be excessive, and then the government, or the government that is importing needs also to you know, be cautious about over importing, and because importing a lot would also really hurt several local producers. But as I've said, you know, just import enough for you know, what's needed for the, you know, maybe let's say for the month or so, and then so that we can give some space for local producers to compete. So it's just really, it's just giving pointers to our local producers that they have to, you know, just shape up and be more competitive.
Okay, thank you very much, sir. We still have quite a number of questions here from our online participants, but we don't have much time left. So I'll ask the last question na po siguro. Almost everyone mentioned the public-private partnerships earlier in their presentations. Considering that investors and businesses choose to invest in sectors that have a positive business outlook, how do you think can the current administration build confidence for these potential private partners po to enter into PPP agreements with the government? Siguro we can start with Sir Jonathan.
Well, I guess really there's a lot of things to be done in the Philippines. We know that we're playing a catch up against our peers. So people know, and Secretary Pernia, Dr. Ang talked about, and former Deputy Governor Gunigundo highlighted what's in store for the Philippines. So let me put it this way. The Philippines is like a Peking duck in terms of valuation. So that's around 2,000 to 3,000 pesos. Okay, but right now, if you talk to any investor, people think the Philippines like a fried chicken, which is could be 350 to 400 pesos. But we all know the potential of this country. We have a growth rate of at least 6-7%, but the developed economies are growing much less than 2%. So you want to be invested in an emerging market like the Philippines. A population growth of over 1.2%, meaning you have a very young population. The rest are aging, but when a person from 20 to 60, their income potential is rising. So when you look at these demographics, this actually gives you a potential of sustainable growth over a period. So they know that. It's just a question of what project people think about governance, how are they going to participate? And we've seen this in the PPPs and the ODAs that the Japanese and the Koreans have done in the Philippines in the last administration. And I know that, you know, they want to do more in the Philippines because they know the Philippines is an important destination. It's just a question of which ones we want to do first. So it's just a question of really selling things. The problem when I was in the bank, when every time I go to an investment forum that I go with government, they will always think of 3 or 4 projects. So Clark, Subic, Bataan. I keep telling them, let's just propose one so that investors will just stay focused. The problem that we want to do is always offer a buffet of products. We need to eventually go direct selling and, hey, I'm just selling the Philippines. You should invest here. And that's the reason why I believe manufacturing should be one of our first strategies, because it will take time to build their plant while we do our infra spending. So by the time their plant is finished, there's already a lot of infrastructure that has been done. The roads, built up of electricity. So these things will take time. So we need to be able to just stay focused and eventually just sell one product. And they will eventually look at the Philippines.
How about Dr. Ang? How do you think the current administration build confidence for potential private partners to enter into PPP agreements with the government?
Well, I think all the necessary ingredients are there. You know, we just need to execute, show them that what works. We already have that, no? But then we need to have to show consistency in how the previous PPPs were done. For example, the Skyway, the LRT and the likes, the extensions. These are all PPPs in a sense, right? So we need to these are big ones. Then we need to, like what I said earlier, refocus some of these towards sectors that really need attention in the Philippines. For example, Sec Pernia talk about it, human capital. So education is important as well. We can't continue to lose our competitiveness in education. As we have seen, the competitiveness of the Philippines is in the services sector, basically. So how do you harness this and continue and protect this and even expand this? Because that expands towards also our inability to improve agriculture and the other sectors, because people are in this sector only, in the services, particularly retail and construction, transport. So is that all that we can offer? So I think we should think beyond those things, and we have the models, we can show it, and then we can help ask investors to help improve our educational system as well, and our agricultural sector. So those are my points.
All right. And Sec Ernie, how do you think can the current administration build confidence for these potential private partners to enter into PPP agreements?
Well, perhaps it would have been better, perhaps, if President Marcos Jr. stayed home first and tried to address, local problems. there are just too many challenges that need to be attended to. But so maybe a couple of trips are fine. Maybe 3 trips at the most in his first semester of being president, and then show as an exemplar attending to agriculture, which he deliberately decided to head himself, because it's a very critical department, and food is really the one of the problems that we are facing now. And so just try to do those things first, even if you don't succeed completely. At least show us an exemplar that you are serious about straightening things up and doing the right things to improve the environment in the country. So yeah, that is what in terms of building. You were saying building confidence. That's the way to build confidence. Not to be traveling so much and then neglecting what he's supposed to be doing. So and also that will be a good signal to not only to local local partners, private partners in PPPs, but also to investors from abroad. If they see that the president is serious and is really trying to improve the investment environment, rule of law, corruption, then you build confidence, and you really don't need to go and preach about the Philippines, because outsiders, foreigners, potential investors, they know about the Philippines. They know about the Philippines because they have ambassadors. They have ambassadors who track what's happening in the Philippines. That's my view.
All right, and that's a very important point din po, Sec. Ernie. And that wraps up our discussion today. It's been a very insightful morning. Again, thank you very much to our speakers, Dr. Ernesto Pernia, Mr. Jonathan Ravelas, Mr. Diwa Gunigundo, and Dr. Alvin Ang. And thank you very much as well to all of our online participants who watched us today, sent their questions, and also stayed with us until the end of this roundtable discussion. We hope to see you again in our next forum. Again, thank you very much and have a nice day.
Thank you, CEO and MD Dindo Manhit. Also, of course, Joyce Ilas, thank you. And thank you to the staff of ADR for staging this very well-organized webinar. And of course, also to the audience, the online audience, and participants.
Bye.
Bye-bye.
Bye.